We've just published a report that shows that global trade has grown faster than global GDP since the 1960s, about 1.5 times faster. Since the crisis, however, this ratio has fallen dramatically. In fact, over the last 2 years, world trade has stagnated. Does this mean that the crisis has altered world trade dynamics? We do not think so. Of course, trade has been growing more slowly in the pre-crisis 2000 to 2007 period compared to the golden age of trade growth in the 1990s. But there were a number of cyclical factors that dragged trade growth lower during the crisis. Developed world demand is picking up, including from the euro area, and world trade growth should be supported as industrial production picks up again. At the same time, other constraints on world trade are beginning to fade. Trade protectionism is no longer rising, and we also have evidence that there is increasing availability of trade finance. Finally, there does not seem to be any shift or interruption in the global shift of power away from the developed to the emerging world. In fact, the crisis seems to have hastened the process, and now emerging markets account for over 50% of world trade if we exclude the intra-EU trade. We believe that a lot of the weakness that we have seen in trade over the last few years has been temporary. As the developed world now emerges from recession, it is likely to provide greater demand, and trade is likely to start to accelerate and will again start to grow faster than GDP. Now, this recovery in trade is likely to be accompanied by a slight shift in the pattern of trade that we have seen compared to previous decades. We are going to see a growing importance of South-South or emerging market trade, centered on Asia, but including a wider range of emerging market countries. And China will cement its position as the true mega trader in the world economy.